Okay, hi, Sherman here. And today in October. Okay. So I just want to check out some of the moves that we were talking about last week. So we're gonna go through some of the majors. Um, we're gonna go through the pound dollar because it's already set up quite beautifully. If you uh, if you check the last week's video, so we're looking for a move up, and then of course, if you can trade this up, that's good. And then once you got your idea is not to stay in this move, but rather look for a move back down. So if we can get this move next week, that will be a good thing. What I see, what I see right now is this move. Uh, often it does look like it does look like a correction. You might be thinking, why can't this go up, right? Because after all, it's an uptrend. So why don't we just keep continuing the upside? So, well, the trend will end at some point. So the worst part, the worst thing that can happen is if we think it's uptrend and we want to continue a trend, and instead of continue a trend, it just goes the wrong way, right? So we think that this is the trend that continue is going to go up. We must bear in mind the bigger picture here, which is a double top like this. It comes down here. So nice three-way structure here. And so 1, 2, 3. Oh, sorry about that. All right. Okay. Anyway, so you're looking for a 1, 2, 3 structure to the downside. Okay. So that's what we want. That would be the low hanging fruit. So I don't think that this downward is going to start so soon. Okay. So what we want is for always price action to come back to a place of value. 1, 2, 3, 4. So it's now done about 1, 2, 3. Another move up, another move down, sideways like that. Then we're looking for a move down. So hopefully, when that happens, if you notice how price action stays above, see all this three-way move, 1, 2, 3, and then you see it stays above the moving average, this moving average. So what you want to see really is when this impulse starts, you want to see price action, this impulse just mirror whatever you see here. It mirrors whatever you see. You see when this one comes down like that, price action as the impulse stays below, right? Stays below the moving average. So that's a strong move. So this is basically what you want to see on this side. Right? So as we fight to the bottom, right, it's basically what you want to see. Right? The moving averages are going to be on your side. So um, yeah. So what I'm giving here is a bias. What I perceive as the low hanging fruit, and then you can use seasoned traders have their own styles of trading, and how they want to risk their capital, But hopefully, this our buyers are the same, and I'm still waiting on this trade. So still waiting to get in on this trade personally for me, right? Uh, so basically, what I want to see is price action start playing below the moving averages. Okay, so as an impulse, is you want all this to turn basically, right? And then you finally price action will play below. This price action will play below. See this price action playing below the moving average. So you want to see it, and then of course you want it to hit down to the downside. So that's pound dollar. Uh, let's go look at the popular majors, euro dollar. Okay. Uh, this was a good move down. So at the point in time, we're looking for at the point in time I was trading this. We're looking for the move to the downside. And the reason for that is because you're looking for a 1, a 2, and a 3 like this. You got 1, a 2, and then a 3 this way. But I'm not looking for this to continue down so much because once it breaks this low, there's going to be problems right here, you see, at this low over here where there was a recent push to upside. So it comes to this low, you can start to exit. So I'm going to clear everything. So what will make the trade easy right now is for price action. There was a pullback here. Price came down, it pulled back up like this, and now price is over here. So if price will come back up somewhere here to this moving average over here, because now it's a strong push, you see, strong push. So since it's a strong push right now, if price comes to moving average, that's when you're interested to see what goes on here. Oh dear. 1 second. Yeah. Okay, sorry, and we're back. So something like this is always good because it's a low-hanging fruit, you see. If we can go up like this, the moving average always good, low-hanging fruit. Right? If it continues down like this, generally is not so good, right? So always want some kind of pullback. Quick mention about this, a bullish retrace. This bullish retrace that we're talking about actually happened over here. So it happened over there, so you can see the 382. So once it hits that level, you got to exit. So when you're looking for the buy, at any point in time, you know you're looking for the buy, you're looking for, you see you can actually move the fib this way. Hit the 382, then that's when it's time to exit the market. We're looking for that retrace, okay? Because once it hits that retrace, then this price can come hit the 270. And in order for it to come hit that, you always want some kind of pullback like this. So some moving average over here is always a good thing. And look for price action. Price action to suggest a move back down. Okay? See how price hits a moving average and goes back down. So yeah, try to look for that. Another thing you can look for also is time box. Put it this way. Boom, like so. So if you can have something like this, it's also a very good thing. So you have a time box and moving average. Then you go. On the outside, only sell once price has moved to the outside of time box. So if price goes up here, don't sell. Goes out here, very good. Look for price action here, come down. So you gotta look out for it. All this will happen next week. You're what if this one just goes straight down, right? Well, that's not a low hanging fruit. That's something trickier, right? But if it goes up here, that becomes low hanging fruit. So if you risk one standard lot here you could risk 2 or 3 because this is much better, right? This is a low hanging fruit. This is a high hanging fruit, just like poker. If you have a pair, well, maybe only risk $100. But if you have a flush, well, maybe you can risk $300. If you get my point. So when the trade becomes better, you can risk more. When trade is low, it's not good. The probabilities of winning is not that high. Then you just risk less money, right? So looking for low hanging fruits, it's a good practice when it comes to catching swings in the market. So euro dollar, pound dollar, we've done those. Next, we're gonna look at Dodge. Okay, we're gonna look at Dodge. So I do like Dodge the upside. So I'm gonna close that. So Dodge has always got an upward look ever since here. Look has been upward. So you have got a double bottom right. This is a double bottom right there. Okay. Why is it in a double bottom in relation to this strong move to the downside? This is a double bottom. Price action made one strong push up sideways. What you want is this 1, 2. You want this upside up, right? You want this will be the low hanging fruit. This is the upside that we're looking for. If we can get that, that will be pretty amazing. You could so look out for this trade. I think it's a really good trade. All right, and preferably if we can stay above the moving average, that would be perfect because 1, 2, you see how it goes above the moving average here. So if you want to see price action playing above here and price action here playing above the moving averages supported by all that and time box as well. See, so really good stuff, right? On the outside, you're looking for the bias should be up for this. So for those crypto fans, good for them. So Bitcoin also, Bitcoin made a good push to the upside as well. So did it have the support of that? It was pretty sharp. Yeah. So it didn't really come out here on this side. You know, this one could, if you wanted to mess with people, yeah, this could have just come straight down like this. You could have messed with people that way. But since it's either we buy it from here or when it breaks out, we see what's going on, then you can try to attack it. If it breaks out early, could try to attack it. Not the best. Not the best. It's still safer to wait for a pullback. Like what? A pullback like this. If it went up and it pulled back like this again, this would be a good buy. Okay, that would be a perfect buy, especially if it starts to respect the time box as well. So you're just trying to put more stuff in. See, strong push and then it corrects back slowly. This all makes a good buy when it comes back to the moving average, right? So timing is very important and very useful. Okay, and if it breaks out that fast, it means that the impulse is really strong. So one thing about the time box is if it breaks out really fast, okay, if it's here, it's a good buy. If it breaks out really fast, that means there are no sells on this, because breaking out before it breaking above this high means price action is shooting up really fast. There can be no sells on this, right? Let's say some people like to play or whatever, play some kind of harmonics, like, you know, and they want to sell it here. Generally not a good idea, especially when it has fulfilled the time box criteria of what would be a leading diagonal. Okay. So basically, what you're looking for on this pair, still bullish. If you're lucky, it pulls back to some moving average and to some supply over here. Then maybe you can try again. So from a swing perspective, Bitcoin, you're looking for until 11 December before you even try to get funky with the swings, you know. So you just have to wait. Swing on this. Yeah, so that's what it did. Bitcoin. I wouldn't trade Bitcoin at these levels because people who thought it broke out here, then often people are taking profit, so you start to have this weird little pullbacks. So Bitcoin is a very long-term type of chart. So let's trade a higher time frame. Let me see. We have euro dollar, pound dollar, coin. Let's go look a bit of oil, and then just wrap it up. Oil. I think we look at oil and a bit of gold. Let me see. So what is gold doing? Yeah, there was one little move here on gold actually, which was this one. This was an easy one. 1, 2, 3. Low hanging fruit. 1, 2. Yeah, this one's a low hanging fruit. Then when it pull back, this is all funky already. This down and up is all funky. But the move that actually we wanted, right, was actually which one? This one. The low hanging fruit. So at this point, the bias is up. This is low hanging fruit. So at this point, bias is upside. This is the low hanging fruit, right? And to get low hanging fruit often requires for the trade to ripen. So it actually took 25 days in order to be confident enough to get like a royal flush or flush, a 90% trade probability type of trade, right? So you have to wait a long time. So the upside of time based trading is you gotta wait a long time in order to get a flush. So it's not everyone can wait that long, right? But if you have enough funds and you understand this methodology, you can risk like 1,000 and make 5,000, or you can risk 10,000 to make 50,000 or something, because the probability of winning is very high, right? So timing is mastering the art of timing is a very important skill in terms of leverage trading. Okay, because we cannot hold the position forever, unlike investing in stocks. Just buy Tesla, hold it for 2 years, right? But you cannot do that in leverage trading. So because we cannot do that, we have to be immaculate our timing or try our best to be. Okay, okay, so that's go. So now that the move is done, what can we expect from gold? Mm, let me see. It's still upside. Thing about gold is it could actually, yeah, it's not here. Price was at the low here. It's a good push to the upside. But so there's always this problem of gold actually coming down here and even breaking this low. So there was only one good move from where I could see. This was a good move. Anything else here, it's kind of 50-50. It could go up here, it could break this low and even break this low. So all very tricky from now on for gold. Right. So I would not trade gold so much anymore, if you ask me. I only saw this good move. Okay, so but let's say we need to force a trade. Let's say you want to force a trade. Well, you just have to stick to the upside then, because you gotta trade the trend, right? So it would be, if you're going to trade the trend, there is this strong push out here. And I can only advise that if you want to trade that, something like this risk reward is perfectly fine, like so. You play for the break on the top here, about there. So you want to trade gold, but don't worry so much about the profit. The most important thing is actually not this. Okay, don't worry about that. This is what you need to focus on. This downside, okay? Focus on the downside. Make sure that it's something that is logical and sensible, right? If you put a risk reward like this, it doesn't make sense, right? It doesn't make sense. So 1:2, 1:2.3, I think that's perfectly fine. And you're risking it below. You're just believing that this can continue to go. But again, I really stress that both ways are possible. If it breaks this low, it gets really tricky. There's so much it can do. It can even come back down like this, 1, 2, 3. Okay. So all you want is price action, push it upside and know where your risk is, right? So price pulling back to the moving average. It's respecting it for now until it's no longer respects the moving average. Yeah. Right. Let's move on. Let's go look at the oil. So it respects. So as I said, see, it respects it until it no longer does. Until it no longer does. Yeah, I don't care about you anymore. So just take note of that. So what is this? Oil. Let me see. So the last push on oil was so over here. You do have this clear structure over there. You have this pump like so. Yeah. So not much you can do on oil for now, because a safe move would it be coming back to some moving average, push up again. Came down here. So you just gotta let it push back to some level before it decide to actually try again, right? And so now oil has got this. So this is the trend, the current trend for oil. Okay. So do something like that. So coming back to the area of value over here around 74, it's a good idea. See what this does. Of course, what you don't want is for this to keep pushing up forever. Right. If you want to risk that, there is a small little trend over here. But I prefer bigger swings. Right. Question is, do you want to trade this piece upside or wait for a pullback like that? Some area of value. So even if this doesn't go up there, but it could go up there. So at least there is some, even if this was to go up here and then come back down, but at least an area of value, you get something. It's kind of safer that way. Right. And it's also, if you look at oil, it's kind of near this top. So things can happen once it hits previous highs like that. Even if it's not move back down all the way down, but that's not what I'm saying, but you expect some kind of issues. People will be cashier and so on. So you're looking for some kind of Some, sell this. This is a rally up. You sell this rally to the downside. What selling rallies on oil, I don't quite recommend. I think it's better to wait for pullback to take the buys. So that's my take on oil. It's easier to look. Okay. So let's say I close all that. Let me just look at 2 days, 3 days. 1, 2, 3. Yeah. So this is actually an Elliott wave. 1, 2, 3, 4. This could be complex. 4 to 5, all difficult. The rally was so strong. I would recommend just waiting for some fourth wave, and hopefully you can catch the fifth one. This one would make sense. So just make sure that just wait for this pullback. That would be a good thing. Pullback to where? You see. Let me go 1 week. So I book somewhere there. Somewhere around here would make sense. Yeah, so somewhere around here would make sense. And then, of course, if you want to combine supply and demand to Elliott wave theory, then that will be it. Okay, so swing plus swings 1, 2, 3, 4, 5, and then of course supply and demand, which is right there. This will be a good place to look for low hanging fruit to go up, right? And it's a place to look for trades. Doesn't mean that it comes here, you just buy because what, under 305, let's go up. No, if you trading this upside requires, of course, price action skills. This is about suggesting places where you can look for trades, which is around here. Right? If you diddle around here, you gotta know what you're doing, because stuff around here can get very messy. This kind of 1, 2, 3, 4, 5. This kind of trades, this zone here is a tricky zone. Okay, and it's tricky because if you just look at this one, it's tricky. It shoots down, then it goes sideways to mess traders up before it shoots down again. So this part is tricky. You gotta know how to handle such things. Yeah. So, but here would be a very ideal place to look for some kind of movement to the upside. So instead of moving up like that, maybe I could just sit like this as well. Some kind, at least you get something out of the whole thing, right? So that would make sense, I would say, for one, two, but this is also a 3. Hold on, let me look at this further. 1, 2, 3, 4, 5. Well, if this happens to be all the fifth wave, there is. If this is a 1, 2, this is 3, this is 4, this is a 5. Then you could always get a deeper pullback. Deeper pullback always possible also up to here. But to get down to this trader level is always a bigger. You really got to see what this movement is. It coming back slowly to go up, or is it coming down like real fast? Then it goes up, comes down, then goes sideways down, and then you get your low hanging fruit like that after a lot of crazy stuff, right? So you just have to see if there's any possibility this can go down after price does about 1, 2, 3, 4, about 4 swings, then 1, 2, right? And then this one starts to turn this way. And you see how it turns? See how it turns? Price goes up, turns, and then goes. So if you can see it turning, and then finally you see some kind of flag where it plays above the moving average. So you combine the wave count with moving average and then see if you can take this to downside. If this indeed is a 1, 2, 3, 4, 5. So that is one. But we also need to see the other possibility would be, what if this is not finished? What if this is a 1, this is 2, this is 3? And then it comes here like what I just said, and then up. So it's just like chess. There are a few ways this can be played. And then we just have to see what price does. But in any case, if it comes here, it's time to look for the upside. If it comes real messy like this and then like this, then it's time to look for a downside. So you have to see what this is before you can even make an educated guess whether we should play up or whether we should play down, right? Okay, so that's just my view on this. That's just my view on this. Tesla was really good. Tesla. So this was a forecast that was made. When I made this forecast, let me see. I made this forecast. Yeah, well, but anyway, the forecast was made. So if you want to buy this, it's always bought after this amount of time has gone. Yeah, about there. So any price action above here, see above the moving average, you're looking for impulse move to the upside. So good. Tesla was really good. If you're investing in stocks, you then moving average should play a big part for people who invest in stocks. Yeah. So okay, so that's one strategy. Using moving average for good stocks. But be careful, do not just bring moving averages into Forex because it doesn't really work. Forex is very extremely choppy, and knowing when to put it on and take it off is very important. But generally, for good stocks, just wait for pullback and then buying, waiting for pullback and then buying. It's a feasible strategy. Yeah, it's a feasible strategy. So this pullback was actually pretty sharp, sharp pullback like this. This looks like one. This is a two. This is a third wave right now. So what this is doing right now is like a 1-2. This is a third wave. So Tesla is looking pretty strong. Pretty strong. Pretty strong. Of course, you cannot buy here because susceptible to a bigger pullback before it goes to some kind of it's rally, and it's rallied now. It's gonna be and just broke this high. People might be taking profit, so then never buy at these tops like that. Right. So when this one shoots up there, when it shoots up, you don't buy it here. Ultimately, you see, it does get there, but not after this stuff. So now it's at this top here, just like this. This and that, they are similar. So you cannot buy it when it's strong, right? You only buy it when it pulls back to some moving average. So that was Tesla. So pretty textbook style box moving averages. Okay. I guess that's all I want to do for now. So I wish you really good luck. Look out for pound dollar. Look out for pound dollar. It's a it's a reasonably good trade, right? Good trade on the outside. See price action outside the box, and you know what you're looking for to go down, right? To go down, you need to know what you're looking for. Right? So what I'm highlighting here is just the bias that I'm looking at. Okay, so that's it. Good luck. And I'll stop recording.